Recording. So thank you very much for joining me again on Sunday. And we are having this session after a break of 3 weeks because I was away for last two Sundays, once in Baltimore and once in another session. So today's session is of finding entries in strong stocks which are already there. So we know there are some stocks, for example, they are performing very well. And I been asked continuously that, hey, what is the good entry for this? And repeatedly again and again, what is the good entry on that? And at times it's really hard for me to reply again and again on the same thing. But I thought that it would have been better that if we have a session around this thing so that people can improve their skills and use some available tools to find entries in stock which are already in a bullish trend. And for this, today we are emphasizing on our using our TR indicator, which, as you know, stands for Trend Recognition Indicator. It's our proprietary indicator available with our software with Heikin Ashi candles. And for those who don't know about Heikin Ashi candle, these are Japanese techniques of identifying and smoothing out trends. So moving on, let us start with first the disclaimer. The material presented here is for educational and learning purposes only and should not be taken as purchase or sell recommendations. Trading, investing in stocks and derivatives, especially futures and options, is risky and could result in a substantial loss of invested capital. I'm not a registered financial advisor with FINRA or SEC, and for any personal financial advice, please consult to a registered financial advisor. What it means that do not tell me that what are your personal holding or personal entry or exit price and how much of the capital or you should allocate to one stock or other stock. That is only your personal decision, and you should consult to a registered licensed financial advisor to help you in your personal financial decisions. So moving on, today's agenda is very quickly I will introduce you a new feature which is alerts on our advanced stocks analysis software. Then we will, because we will be using these alerts at the end of our presentation to identify, to give us advanced signals. And then we will be describing Heikin Ashi candles, what these are, what are their uses and limits, and combining it with our own TR recognition indicator to find entries in strong stocks on TradingView. And the reason I'm focusing on more on TradingView, because in TradingView is very easy to switch between charts and apply or move or add or remove indicators. So, for example, these are our recent winners, some of the tech leaders. One, for example, is Marvel. Other is Simo, MU, AMD. Maybe SNDK is not appearing here for some reason. Flex, TTMI, Arm Holding, and Vickr. Take a look at their 1 month, 3 month, and 6 month returns. And those are phenomenal returns by any measures 163%, 184%, MU 269%, even after a drop of 20%, AMD 114, 146. So the natural question arises if these are rising day by day, then are the right entries or buy points to get on board on these stocks and how to utilize the tools to find some good entry points. That's really the key question. How do we get into an already strong stock? So first we will describe what is Heikin Ashi. Heikin Ashi is a Japanese term and it means average bar. So most of you, I think, are very much familiar with the modified candlestick charts. And it's basically a modified candlestick chart that smooths out price noise. And how does it do that? It takes averages. So Heikin Ashi means average bar in Japanese. It uses average price data instead of raw, open, high, low, and close values. The Heikin Ashi candles reduce noise and make trends easier to read. Consecutive green candles, if you find consecutive green candles in a Heikin Ashi chart, those are basically showing an uptrend. And if you have consecutive red candles, those are basically showing downtrend. Key signal is that no lower wick on a bullish Heikin Ashi is a very strong uptrend. I will give you an example. And no upper wick on bearish Heikin Ashi is a very strong downward trend. But everything has its own limitations, right? So the limitation here is that Heikin Ashi prices are not the real prices, they are average prices. So they are synthetic, not the actual traded prices. So when they are basically used for trend direction and confirmation. When you place the order, your actual price might be different, and it will be different based on the size of the bars because those are the average prices. So let's move on to this thing. This is a Heikin Ashi candle. And the way it is calculated, you will always see a bullish trend with something like this, that a wick on the upper side only, no lower side. That is showing a strong bullish trend. On the flip side, when you will have a bearish trend, then we will have a Heikin Ashi bar in red color with a wick on the bottom side. And the Heikin Ashi close is of a candle is taken as an average of open, high, low, and close prices divided by 4. And each Heikin Ashi, the next bar, opens at the midpoint of the previous bars to give us a smooth trend on the face of it. So by taking a look at the Heikin Ashi candle, you can at a glance understand that whether it's an uptrend, a downtrend, or a doji, which is not being shown here, is kind of the beat has both upper and downward wicks. It means there is no trend, or at least the trend is not established at that particular point. So we will compare two charts, both are AMD, one with the regular candlesticks on our right side and one with the Heikin Ashi. And since it is too small a picture, so I will move to the actual trading view chart. Maybe you can see it very in a better uh, way here. So this is a Marvel chart and this is Invesco Triple Q. So let's have one chart, maybe AMD. AMD is right here and here as well as AMD. So as you can see, for example, on your left is an Heikin Ashi chart. On your right is a regular candlestick chart. Over here, you can see consecutive, forget about the green band on the back side, those are the TR indicator band. If I can hide this thing for a while, maybe this will help you. Okay. So this Heikin Ashi chart, you see a continuous wick on the upside, and this is telling you that you are in a strong uptrend. Over here, you see these are the regular candlestick chart, which I prefer hollow board. So you will, it's very much resemble this thing, except that each candle opens at the midpoint of the previous candles. That's not the case in actual chart. So for example, yesterday, AMD closed at 466.38, right? This is the closing point. But Heikin Ashi is telling you that this bar was closed at 483. And it also gives you on the right side the actual price at that particular time. So when you place an order, you should know, okay, this is the actual price. Since now it's going towards downside, so the actual price should be below the closing price of this candle. And when it is going in the up direction, the actual price will be on the higher side. So this is basically an average of all those four. And why do we take average here? Just to give a better idea that by averaging it out, how smooth the trend is. For example, this is a doji here. So no uptrend, no downtrend, no bullish. But over here, we can clearly see this is an uptrend. If we go into some previous, like February, March period, then it was a downward trend. Now, basically, what we do regularly we provide our TR indicator. And that gives you an idea that for those of you who don't know about the TR indicator stands for the trend recognition indicator. This green triangle is small. This is the first stage. It is showing, telling us that the first stage means the bullish trend is establishing. Then, if the light green band comes, which unfortunately or fortunately is not here, then it means the trend is confirmed and it's a bullish trend. And the dark green means the momentum is on our side as well. So coming back to here, let's combine this Heikin Ashi with our TR chart, and this is our main chart again. This is the light green zone and this is a strong green zone. And you will see a bit difference because of the calculation between the average and smoothing out the regular versus Heikin Ashi. So let's, for the time being, remove this out of sight and just live with this Heikin Ashi chart. At the bottom, you will see one of my favorite indicators, which is PPO. PPO means percent price oscillator, which is a modified version of MACD. For the simplicity, for the sake of simplicity, you can just think it's a MACD chart, moving average convergence divergence. And what we are tracing here, that we will be looking for instances when this blue line crosses this yellow line, which is the average of the blue line for the last 14 period, and crosses the 0 point. This is where the most successful bullish trend to start. Coming back to this chart, here you will see these entry points marked in these blue arrows. So how to identify good points here? It's basically very simple. I don't want to confuse you with the terminology and overwhelm you with so much information. Just think about it. When you have this first stage here, first stage indicator, this green triangle. Now it means that a trend is about to start or there is a change in the trend direction. This is a power zone breakout. As soon as it turns into a green one and your PPO cross zero, that's your entry point. Simple. First stage signal followed by a green zone, which is a third stage, as a second or third stage, and your PPO should be crossing the zero line. That's your best entry. If PPO is already up here, it means that it's a late stage entry. It can still cross, but not from the zero, from at a high level. So for example, on this chart, this is AMD chart, starting from October or maybe previously here, right, June. First instance here, this is a blue arrow. Your first stage came here, but your price was still below 200-day line. So we did not take an entry. Either we take an entry here or we wait for this green bar appearing here or this, and that's your entry point, this or this. And this will give you, as you can see, a good riding trend starting at level something around from 130 to maybe you wait till you observe this thing. This is where the struggle starts around 174. And within maybe 2-3 months, you earn something around 30 or 40% written here. Now, why should we get out of this point? The PPO line starting sloping downwards. So this is what I call a reset of PPO. It goes to zero or sometimes even below zero, and then try to come back again. So similarly, your green zone disappears. So no entry from this point to that point. Again, you find a diamond green triangle here, here, and here. Do we have entries here? No. Why? Because your PPO is sloping downwards. We wait till PPO come again, cross it upwards or cross the 0 point, which is right here. And at that point, your green zone reappear. So we can set an alert whenever the green triangle or the first stage of TR indicator triggers. So that we can analyze, okay, the first stage has triggered. Is the PPO or the green second or third stage are likely to occur? If yes, and it's coming out of a base, then that's exactly the point where we should be entering. So let's say we make another entry sometime in October, 164, and then we just wrote this trend and we waited till something like this occurs. Should be our exit point, because now we can see the PPO is sloping downwards. So again, a reset of the PPO will most likely occur. And the first this red diamond means first stage of downward or bearish trend. But since the stock was very strong, it again gave a signal here. Do we make an entry here? No. Why? PPO is not crossing, the blue line is not crossing the yellow line, and it's not a zero crossover. So we come here. Next point. Do we make an entry here? No. Why? Because PPO is still below zero and below the that line, and the green zone is not there. Heikin Ashi chart trends affect the TR portal trend, meaning does it triggers green red zone? No, the Heikin Ashi chart are standard indicators available on almost all platforms, including TradingView. It is just I am accompanying it with this green triangle on my signal to give you a much better and high probability setups. When the red diamond appears, the most advisable point to leave the stock or wait for the orange zone to appear. When the orange diamond appears, it means there is a change in the direction. The stock can start consolidating. But the strong stock normally does not go into one attempt. It takes multiple attempts to start a downward trend. So one attempt, second attempt, then it started a downward trend, and then the third attempt, and then it eventually found a trend again. Now, issue here with this point is PP was coming down. What about this point? We again, our alert, let's say, tells us, can we go short at the right time? And yes, you can. But in a strong stock, when the market is strong, it's not advisable to go shorting. Especially we don't prefer shorting in a strong stock, number one. And number two, when the market is not in our favor, is going long. So going back to the layout, now we are side by side. We want to just not do this thing. We also want to observe what market is doing. To give you a perspective, right perspective, tech stocks are basically in triple Q mostly. They were Nasdaq 100 or Nasdaq, overall Nasdaq, and S&P. So the tech stock constitutes 38% of S&P 500, and combined with communications and discretionary stock is around 58%. So if the market, let's say, market is in this mode, coming down, and the PPO is going down, and the orange trend, there is no way that normally a good big size tech stock like AMD. You see the similarities here? AMD was struggling here. Why? Overall market was not supportive. So let's see, we get a first stage signal here. Is it likely to fail or succeed? It's likely to fail. Why? Number one, its own PPO is going down, means momentum is slowing and is actually losing momentum and going down. But not only this, at the same time, market was also in a downward trend, doing the same thing. So this is what exactly the AMD was doing. 90% of the chances you will see the same kind of correlation. Unless the stock is very strong and it's generally a smaller stock. So normally the smaller stock does not have that kind of weight in S&P. So all these big stocks like AMD, Micron, SanDisk, Nvidia, they will have same kind of behavior what market will be doing. So this is most likely to fail. Now we come down here. Next point. It's 8th of December. Another first stage signal triggers. Should we go long here? No. Why? It is still above the 200-day line. This red line is 200. Because the PPO is on the negative territory. And look what market was doing at the 8th of December. Something was here. Market was still trying to come out of this thing. So although the market means the S&P, this is QQQ. Eventually, market was strong, but we should be targeting when PPU crosses this zero line, that thing, this point. So that is why this red arrow means that these will be failed signals. Chances are there. But this signal, when this appears, zero line crosses PPO, the green bar appears, and the green band will not appear unless and until the PPO over here crosses the zero. It will all, that's the inherent characteristics of the TR signal, and that should be our entry. But before that, around 15th of Jan or 14th Jan, let's see what market was doing at that time. 15th of Jan, market was over here coming out and trying, if he was positive for the market, so trying to do a move above. So it was a genuine signal. But since, as we know, start of the after the Christmas season, I think, so the market takes some breathing and came down here. Even then, it was a genuine entry, and it gave, you entered around 219, it went all the way up to 260, and it could easily give you 10% return before turning direction again. And when it turned direction, see what market was doing. Again, market was in the same pattern. So right now, we can, if we want, we can short it. That's fine, and that's understandable. Again, we get this first stage signal here and here on MD in March. But what market was doing in March? Right here, struggling. Downward direction, PPO of the market zero, going downwards, orange zone. So these signals most likely were bound to fail. But when it come to here, this point, the PPO again started crossing zero line, and the smooth this TR signal appears, the green zone, and the market over here started coming beyond above this 200 line, and this is what our higher success of higher probability of success at this point. That's why we make an entry when the green zone appears, and it market eventually followed, and now we both are in the on the same boat. Same smooth uptrend, same smooth uptrend. The market is much bigger than the AMD itself, so it can have certain factors based on the news and other items. We ignore all this news, all those noises. We just follow this thing. And when this kind of is, the Heikin Ashi candles are like in a strong trend, and your TR indicator is in a strong trend, then you are going to find this 9 period or 5 period as a very good support line. All you need to do is to follow it. Here the patterns again changes. But since the stock was very strong, it took a while, and then again it went come back here, and then it came down here. Now the question again arises, okay, is this a good time to get into this stock? I would say no. Why? We have already moved a lot of distance from 203 to maybe 460 or 500, which is more than 100% in a matter of two months. At this time, generally a stock starts consolidating and they catch up with their means is known as mean reversion. So there are higher chances of that it consolidates. When is going to be the good time again? When again this signal triggers first stage, followed by a PPO crossing zero line, and the TR signal gives you a green zone starting here. If something like this happen, we will again jump into the bandwagon and follow our trend. And why we should then go and take a look at the Heikin Ashi, because it will give us a very smooth view of that, hey, we are in a strong uptrend. Although those are not exactly the real open and close of the prices on that particular day. These are the real prices on your right side for triple Q. Now, what we should be looking for use check this pattern for any strong stock. Let's say we want to take a look at this Marvel thing. Same pattern here. First stage here. When? September. Most likely fail. So I would not take an entry here. But here the PPO zero, PPO line crosses zero line and the green zone appears. And we are about, that's the point to go long for Marvel, 23rd of September. And you see, you get out here, that is 86.2, and you are at 75. Easily, you are approximately 15% of return. And then on the side note, you also will be monitoring the market. If the market is in your favor, chances are there Marvel will find support and next first stage will be successful. This one or that one. So this one here, PPU line comes to zero again, starts, and then you go back. But eventually in the January, as we know, the market started and came down, and so did the Marvel stock. Till this point again, at the beginning of the April, we now should we take an entry here at this point or this point when the first stage appears? No. Why? Because the PPO is still negative and the market was doing what? Market was doing this. So market was not supporting. When market was not supporting means the tech sector was reeling. It was not supporting. And Marvel is a component of triple Q and the tech sector. But at this point, right here, market took a turn right here, and eventually the PPO was rising, and our PPO for Marvel was right here. Green zone appeared. That was the point for entry. If you miss this entry, then wait for the next green zone, this one, with your stop loss being here. If you still see that market is doing well, which is 25th of March, and which is right here. So let's say we missed that entry, and 6th of March, the war was in full swing, and we just not focusing on going long, but this would have been our entry around 26th, 27th of March. If you're following me, you probably will realize that towards the end of the March, when we saw this action happening right here, and many stocks, then we gave a bold calls for many stocks. Now, what are some questions when you get these indicators want 10-minute, 4-hour charts? I'm not sure what is the question is. These are the daily charts here. 4-hour or 10-minute charts are used for day trading. This is not for day trading. This is for medium and short-term trading or long-term trading. So these are daily charts. And the quality of the signal gets better uh, when you go to the longer time frame like daily or weekly. Later, can you show how to configure the Heikin Ashi trend in the TR portal? This is TR and Heikin Ashi combined. I'm sorry if I missed that. Go to your indicator section on the Heikin Ashi is only available on TradingView with TR. Go to this indicator section here, and here, I'm sorry, not indicator, here, candle. Here you can choose different types of charts. Normally you will choose candlestick, regular candlestick or hollow candlestick. So we can choose regular candlestick. This is regular candlestick, and we can choose Heikin Ashi from here. These are Heikin Ashi. Basically, these two are independent of each other. Trend recognition, I give you access. When you subscribe to it, it's right here. And Heikin Ashi is built in the trading view. Over here, for example, you go to this chart, go here, this is hollow candle, this is candle, the chart appear, these are regular candle. And if you want to select Heikin Ashi, they are right here. Now these are Heikin Ashi. How to get PPO? No, you don't need to get any other additional subscription. Again, this PPO, go to indicator, search here, percent price or oscillator. This is PPO, percentage price oscillator. And this is here. So it's built in with the trading view. You don't have to have any new subscription for that. Okay. So this is how we detect trend and we find entries. Take a look at any other chart which MU, we gave example of AMD. Now let's see Flex. More or less, you will find the same pattern. Here the PPU is already up. We have a power breakout zone, and right here, all you need to do, you need to make sure the PPU is rising and it always crosses zero. The best point is when it is crossing zero. So for example, over here, first stage statement, should we take, now you are aggressive in nature, you can take a chance here. Problem is that this is more likely to struggle for a while. So why? Because the PPU was here. It took a while for the market and the PPU to come forward. And the market was struggling. Look what market was doing around 16th of March, right here. When the market is struggling in its zone, it will also take down even the stronger stocks with it. But once market stabilizes right here, towards the beginning of the April, most of the stocks started finding support. This is your first stage signal, and this immediately followed by the green zone. PPO is already over zero, above zero and rising. That's your entry. And then you just, if you miss this entry, now you can see that it is following this yellow line very well, and market is doing the same thing. So you can be aggressive in nature and make an entry when it pulls back to 9-day EMA or here. Follow it as long as the trend is in your favor, and most or you see most of these Heikin Ashi smooth candles right here. What is the question here? MU, I am going to take the MU. You need to subscribe separately for TradingView. TradingView for the basic subscription is free of charge. But the problem with the basic subscription is that they don't give you live data, number one, and you have to live with only one or two indicators. So if you are using this trend recognition with this Heikin Ashi, you won't be able to add PPO here. Then you need to have their essential plan subscription, which I think is $15 per month. The same indicator, Mr. Abbas, works for day trading. I was focused more on the long-term trading, but if you want to go that this indicator for the trading view is basically uh, it was actually introduced for day trading. 1 second, let me show you the day trading indicator if you want to see it. It's on the 5-minute charts, auto adjust, and this is for the day trading. And many of my traders, my subscribers are using this. Let's do it for this MU. This is for the day trading charts, and they are using it for the day trading. And for the day trading, we use it in a different way. Like this is MU. And it started filling here. It filled at VWAP. Now the VWAP will appear. And it gives a very good short signal on that particular day, which was Friday. Like I said, we don't do shorting in stocks because of obvious reasons. So for example, you now this is day trading, that's why I don't want to confuse many people because not many people are doing day trading. But I have a different a recording available on my YouTube channel just for the day trading using use of this indicator on the day trading, which is different from regular trading. Okay, so we move back to our daily chart. This is our daily chart, and over here, and again move back to daily chart for the market as well. Give me a second to readjust all the things. So the same indicator works in the same pattern for the day trading as well. And in fact, this whole thing was designed for the day trading in mind. All right. So someone asked me about uh, Micron, I think. Let me see what is happening here. Everything has been disturbed, for example. Micron. You work for AMD. Okay, we are actually in 2025 because of the day trading, the entire scale got disturbed. So this is Micron. Someone asked me about gave an example of the Micron. Okay. We were here in September, Micron. I think I discussed this, or maybe that was AMD. On October, so we had a signal here for the first stage of TR indicator right here. Are we going to take an entry right immediately after? No. Why? PPO is still negative and there is no second or third stage. We will wait till this green band appears right here and here the PPO crosses. This is exactly our entry for Micron, some around 3rd of October. And let's see what market was doing around 3rd of October. Market was already in a strong trend. So market was supportive. It started coming out of that the late September. So that's why Micron did very well on this trade, 166 to let's say 260. Then it started struggling, and this is the time to get out of the Micron because the PPU is continuously declining, means the reset of the PPU is about to happen. First stage again appear here. Do we take an entry in Micron? No. Either we still are in Micron from this point, which is October. I'm sorry, this is AMD chart, you're right. So let's move to Micron. My apology. Okay. 15th of August. I remember we gave an entry in Micron something around here. 15th of August. Bit late, but we give it that. With a stop loss below this level. So we gave an entry around 120. A stop loss should be below this level. So Micron struggled for a while. And where? When this people cross zero here. And then again an entry appears here when a green band appears here. So either this point or that point. 120. 4th of September. Let's say you made an entry around this point or this point and just follow then this Heikin Ashi trend or this chart. Now, let's say you are here. Question arises, should we enter here? No. Why? Because the pullback is likely to occur anytime, which occurred here. But since stock was strong, it found support and finds another entry here. And this is your entry. If you miss this entry and this entry, when is the next entry? Either on a pullback, because the problem with this pullback is that it's already extended. So we don't know that the momentum will come back to it. Right now, the momentum is not there. So we wait till another green zone appears. Now we are into a late stage, first stage, second stage, third stage. Chances are there that this time when it will come down for a longer period of time, which it did. Eventually, it finds support here. Now, first stage, and this is the light green zone, second stage. Do we have an entry here? Yes, we do have an entry here with a stop loss somewhere here or here. If we came out here, then we have another entry here. And the MU was so strong that its PPU never came down to zero level. But whenever it crossed this mean and the green zone appeared, this is another entry right here. Then this is another entry. Now, eventually in February, it came down. A first state trigger signal appear right here. Should we go long here? Any idea? No. Why? PPU is not crossing it and there is no green zone appearing. So we should not be making an entry here. And look what market was doing in the February right here. This is what market was doing. I don't know why this red line is appearing. Anyway, the market was doing this. So do you think that the Micron will get support from market? No, Micron is at its own. Most likely this will fail. That's why it failed and it again came down here. Till this point when the PPU again crossed zero, first stage signal here and the market is in the same pattern right here. That's the point to enter, either this point or that point. And you carry on. Here, you carry on early April, 4th and 14th of April. Now, at this point of time, when the green zone is here, PPO is still rising. This is the point that it will find support along this 9-day line. It again found support here. And now we are at this point. Okay. At this point. So the again $1 million question is, should we make an entry here? Look what PPO is doing, coming down. What markets PPO is doing, coming down. Can it go up? Yes, why not? But we will again wait for our first stage signal here and start of green zone. Now, is it going to last? I have my doubts. It's not going to be similar lengthy trend just like this one. It could last for a few period because it's a late stage. I think I'm in a draw mode for some reason. So it's trying lines. Why is trying lines? I don't know. Give me a second. Anyway, so this is what is happening, and this is what we should do. That we now should wait for a reset kind of thing, something like this. When it comes down to these three moving averages, that will give us the maximum leverage and maximum point right here. At this point, yes, it can have an entry, green zone appeared, and we can follow the trend. Maybe if we are lucky, the micron is still undervalued as put forth by many of the uh, analysts, and maybe I don't know why these lines are appearing. Maybe I'm doing something wrong. I don't know. So these lines are not going away. Anyway, and it looks messy as well. Maybe I need to cross this thing and I don't know what's happening. So I hope you got an idea. Someone else annotating? How is it possible? Maybe someone else is annotating. I gave participants. Let me see. Can someone else annotating? No, no. How is it possible? Okay, so maybe it gave you an idea that how can I clear all this annotation? Okay, thank you. Appreciate that. So we are back to our charts, and I give you several different examples, and you will find the same pattern here. Let's take an example of what is the question is what is power zone breakout? Power zone breakout, it means that it's an automatic feature of our TR indicator system for the day trading as well as for this, and it is sensing that it was right here. This is power zone breakout. That it was kind of a consolidation tight range. So basically it's a tight range breakout and it's likely to give you a bigger move coming out of the break zone. That's what the power zone breakout is. So let's go to SanDisk. Same pattern here. Starting from August, right here, and same pattern here, as you can see. First stage, but here we have a crossover, a P0 crossover. So that is likely to hold this breakout and give us a bigger move. If not this one, then this one. And all we need to do is to set alert for this thing, wait for a PPU crossover, and then make an entry when a green zone appears. So the sand is first entry, second entry here in August last year again. Let's say we miss that. This is the third entry. But now the PPO is coming down. It again went up, so that is in our favor. Now we are here. Let's say we are towards the end of the November. Should we make an entry here at this point? Answer is no. First stage appears. Look what PPO was doing, and there was no green band, so it means it was likely to fail. Should we make an entry here? Yes, because there's a PPO crossover, although it was above zero, at this point or that point. These are our entries. If we miss this, then this is our entry. If we miss this, then this is our entry. And the Heikin Ashi chart helps us in supplementing our TR indicator, and it's telling you that we are in a very strong trend. Should we take a chance here? Yes, we can take a chance here, according to our. But during the month of March, remember what market was doing? This one market was doing. So should we take a chance? We should also consider what market is doing. Is market supportive? No, market is not supporting it. So it's most likely to fail. Okay. The light green is second stage and the dark green is third stage. This green triangle is the first stage of TR indicator, light green is second stage, and the dark one is the third stage. Third stage means we have momentum along with us. First stage means there is a change in the direction. It is sensing. But the momentum or the buy zone has not established. Second stage means we are now in a buy zone, but momentum is still not there. Third stage means now the momentum is there. So let's say we again came back to the 30th March here or 2nd of April at this point. Should we enter here? Not at this point. But should we enter here at 8th of April? Yes, we should. Because at the 8th of April, market was doing this, breaking out of this waves and starting an uptrend. And we were already here in a strong trend. So then we should, 8th of April was another entry for SanDisk. Okay? Just follow the trend. Heikin Ashi and our TR indicator. Should we make an entry here? I would say no. Why? Because PPO is going downward, but it is still strong. It will take a while. Now, should we make an if first stage appear here? Should we make an entry here? No, unless we find the market is supporting the same action as well. Our PPO crossing zero or crossing this line. So this is what the logic is. That a strong stock, we understand that you miss this point or that point, but you should understand that as far as we go from the mean averages, the tendency is at some point of time the stock will catch up with these mean averages. And this is what is going to happen in every case, regardless of whether it is SanDisk or MU or Marvel whatsoever. Second thing is that we should always be considerate of what market is doing. That's the key lesson. If the market is in this mode, there is no way that this, even the strong stock, is going to give you this kind of a bullish trend. It will have some impact on even on the very strong stocks. And most of the stocks will be following this pattern. That's why market is doing this. Because what is market? Market is an index of all these stocks. Okay. So we were here and let's go back to our presentation. I actually explain all this thing. Step one is to confirm a strong stock. TR indicator should be in uptrend stage. Stage one triggers. Preferably stage three, green band. Step two, switch to Heikin Ashi. If you don't have that Heikin Ashi, I can share that layout with my customers on the Heikin Ashi trading view so that you don't have to switch it back and forth and you can watch both of these stocks with Heikin Ashi, without Heikin Ashi, along with the market in one view, just like we are showing it here. Stage three, step three, Heikin Ashi confirmation. You now understand how does the Heikin Ashi candlestick complements. The Heikin Ashi candle at the flip bar should be green with no lower wick. That's the key. If you miss that point, all these Heikin Ashi chart, they do not have a lower wick here. All these red ones, they have a lower wick. They do not have a higher wick. That tells you the chart direction. And step four, execute at real price. Always remember that Heikin Ashi prices are slightly different from the actual prices because those are the average of these bars. So your actual price, for example, triple Q is 705, while the Heikin Ashi bar is showing 717. So that's the difference. So when you will be executing a trade, you will be executing at this price, 1559 in case of SanDisk and 705 in case of triple Q. So always remember that in your mind that this is an average of the prices. Now, how do we know that it's time to get enter into a stock? So if you go back to our analyze stocks, the customers who have access to this software, we have an alerts page here. And in alerts, you can add a new alert on any stock on these parameters, these indicators like price, daily TR status, weekly, EMA cross. I will add a PPO zero crossover very soon. Buy zone, power zone breakout, and volume spike. So, for example, we want to know when the first stage daily TR status occurs. So, which stock I want to set? For example, Broadcom right now is in a downward trend, but I want to know when its first stage will trigger. That's neutral buy. Neutral buy is first stage, buy is second, strong buy is third stage, and create an alert. So what it is doing, it has created an alert for me. Daily TR become neutral buy, and whenever the first stage will trigger for the Broadcom, it will send me an email. Similarly, I can uh, set anything that if the Broadcom, for example, triggers when the price is above 400, I think it's below 400 now, then set an alert for me. And it will create an alert, a Broadcom price above 400. These are the valid alerts for me. Similarly, if I want to see if Broadcom, for example, comes above a daily EMA of 20, above and below. Above means it comes below it. Above means it crosses the 20 period or 20-day EMA from the below, and below means that it crosses the 20 period EMA from the above. So I created another alert. That's how I created alerts here, especially this TR one. So for the Broadcom, let's go back to our TR chart and plot the Broadcom one here. AVGO stocks Broadcom. So the Broadcom has come very sharply here from something around 490 to 385, more than $100. Now what I want that when this thing appears, this first stage, it should let me know. So that's what this alert is doing. Price above daily TR become neutral buy, then it will should trigger. And since it's a daily chart, I will have time. I will check my email. I know, okay, the Broadcom is doing this. Is it time to enter? If it is the PPO line is, you see, it's going down. I think the PPO will eventually come down to zero or to this point, and then it will trigger this thing. First stage, we will wait for the PPO crossover. We will make an entry here. And that's how we will find a good entry in Broadcom again. Because fundamentally, the story is still very good with Broadcom. This is just going to be a temporary pullback. And $100 in such a strong long-term stock is quite a lot. Same phenomena, I can set alerts for the first stage TR indicator or second stage. Maybe I am conservative. I want not the first stage. I want this green zone to appear. So I will set an alert here for Broadcom, and I say okay, maybe SanDisk. Okay, whenever the SanDisk again give me a buy signal, a second stage TR signal, create an alert for that. And here is my alert here, SanDisk, daily TR becomes buy. So what the system is doing, it is having it all its the alerts in its database, and it will trigger whenever the time will come and let me know through an email. So this is a new feature. I just introduced it to the last week, and like I said, I will add the PPO zero crossover trigger as well. To me, I think that is also an important signal to complement this entire system. So that's how we will find entries again in good stocks like Broadcom and SanDisk and others. But remember, we are not going to take our decision in isolation without taking any consideration that what market is doing. Let's say market is doing this, and I am trying, and I have a first stage signal, even the second and third stage. You think Broadcom is going to sustain that move? Higher chances are no. We should be going long on these kind of stocks, which are market stock, which are big stock, which move market and market move them only when market is in the same direction. And by market here, I mean It's a Broadcom, it's a tech stock sector, tech sector stock, then Nasdaq is the right index. If stock is not in Nasdaq, then S&P 500 might be the index to follow. And if stock is very new, is neither in Nasdaq, neither nor in S&P 500, then maybe IWM or Russell 2000, smallest stocks index. That's the index to follow. So for example, Sunrun, let's say, and I want to find an entry in Sunrun. Oh, not here, here. And Sunrun I know is neither in neither is in Nasdaq nor in it should be a part of IM, or because IWM Russell 2000 has 2000 stocks, so the weight of Sunrun is very low in that. I will go for an ETF for IWM and that probably is PWB, I think. No, PBW. I just mentioned in my uh, weekly commentary of yesterday. It is PBW. Oh, okay, got it. I was doing a mistake. It's in should be in the funds, not stock. PBW. There we go. Invesco Clean Energy ETF. So this ETF is doing this thing. Let's take an example, not Sunrun. Sunrun is a beaten down stock. First Solar. So First Solar, again, I'm making a mistake here. I want it to on the left window, First Solar, and I want PBW fund in right window. So we are here, First Solar, okay? Here. So let's say we were here at this point of time. Sometime here. When? 7th of April. So it gives a signal here, it gave a signal here. And then the fund is in the green zone. Eventually, this stock picked up and it followed its broader industry ETF. So where was its entry point? I would say beyond above this 200-day line, maybe this or that. That's what is the entry point. How do I track it? I can have an alert in my system, just like I explained it. I have a message, couldn't add TR trend recognition indicator version 8 in my trading view. Do you have a subscription to it? You have to have a subscription for TR indicator with me. And I'm going to explain it to you next slide how. Only then you can add it in trading view. That's not a built-in trading view. That's my proprietary indicator. Okay. So I hope you got the idea that how do we catch the good stocks, especially those stocks which are already in strong, already, and we missed their entry, or we want to re-enter. That's how can we use this system, although it looks a bit complicated, but actually it's not. All you need to do is just need to take care of two or three things. Number one, first stage signal, second stage signal, third stage signal. Number two, PPO crossover and above zero. Number three, what market is doing. If you can just take these three or four steps, what market is doing and what your stock is doing, and whether you are a Heikin Ashi plus TR indicator good trend, then this time to go. So going back to this thing, if you like this thing, and the question that how do we get this thing? So many of you are my customers, you already know it. We had different levels or different tiers of products. One is the weekly commodity stock pick, which is $9.99 per month or $110 a year. The full software, which gives you these alerts, these stocks analysis, AI powered system, is $25 per month or $275 per year. Now, if you the TR indicator itself is either $20 per month or $20 per month for trading view. But if you buy any of these annual, like weekly commentary annual, then you can get the entire year for $120 only. So for example, you get the annual version of weekly commodity stock picks, so that will be 110 plus 120, 229. And it's on my website. The website address is given here, analyzestocks.net. If you want to have this alert system, AI news sentiment analysis, AI analysis, and the complete software, that's along with the software is 275 plus 120 is 395 a year. And the offer is also available for existing annual plan subscribers. If you are an annual subscriber of this weekly commentary or the stock analysis software, then you can just add for $120. Otherwise, it is $200 per year if bought separately, the day trading indicator for TradingView. If you are interested in it, just you can go to my website, which is analyzestocks.net, and you can, or you can write here. The website address is here, or you can direct message to approach me through WhatsApp or my phone as well. Any further questions? I hope you like the idea, the theme behind it, and the way you should get on board with this thing. Or maybe I can open up, allow people to unmute themselves. If not many people start speaking at the same time. Abid, yes, MACD can be used instead of PPO. Yes, there is only one reason I know. Uh, this percentage on that. You can ignore that. Technically, MACD will give you some number here, which is a non-relevant number. So that's the only reason I use PPO. You can use MACD instead of the PPO. If you don't like, instead of the PPO, just delete it here. Okay. And from indicator section, find MACD. And here you go. But the number here does not make any sense. 25, 21 times. What does 10 mean? What does 30 means? Probably irrelevant. The PPO divided by the average line and give you a percentage that how much this line in terms of percentage is away from the average line. That's the only difference. So you can very well use this PPO as well. Question. Well, if you want, you can speak up. You can unmute here. You speak up. You have a session for the day trading. I already had a session on the day trading, and it's there on my YouTube channel. The YouTube channel is here. It's on the presentation. YouTube.com/@MJ Software right here. And there is a dedicated session, at least more than one, 2 or 3 sessions on day trading using this TR indicator. Please share link for day trading section. I can do that, not an issue. YouTube. There you go. Guys, I have allowed you to unmute yourself. You can speak up if you want. Here is this, introducing day trading indicator for TradingView. This is one. Taking the day trades using the day trading indicator view for TradingView. This is the second one. Third one is the setting up the trend TR indicator, day trading indicator for TradingView. This is the third one. These are, and the fourth one is this one, day trading stocks using TR indication for TradingView. There are 4 videos. 2 are long sessions. One is long session, 3 are short sessions, and you can watch these at your convenience and then get it. Okay. Any more questions?
Yeah, this is Fawad here.
Yes, Fawad.
I have a question regarding NVIDIA. You just said there is a support for where, I mean, 197 to 200. So, but if you see 50 EM, it's already broken now. It's towards 200. So 200 is 185. Uh, that's the entry point. And if you see PPO, it's all towards red side. So how could you say 197 to 200?
1 second, 1 second.
Yeah.
NVIDIA right now is 205. It has not broken to 200.
Uh,
It's NVIDIA's 205. This is the last day.
No, I'm saying EMA 50. It was showing on the chart, it was this 206.40.
One second.
That's,
1 second. Let me go
yeah,
back to the normal candles. Okay. This is Heikin Ashi. Okay. Yes, it has broken its 50 day, but
yeah.
I was talking about this support right here. If I can show a line here, horizontal line here, you see, this is the support I'm talking about right here. Another line here.
Oh, it's
190.
between
Last
50
time
and
it came
200.
here, it finds support two times.
Oh,
One, two. And before that,
okay.
it was acting as resistance. One, two, three. So that is going to be a good support zone for NVIDIA. At that time, when it will come back to down to here, probably the PPU will reset to zero. And
Oh, okay.
you see, so at that time, when it come back here, it might break down support or consolidate. And when it goes back like this thing, PPU goes again, green zone appear. That will be your time to make an entry in NVIDIA. Same concept.
Okay. And last time you said regarding Micron, we can take position at 20 EMA. Now it's around same time, right?
1 second.
So,
Let me
uh,
give Fahad 1 second. Give me a second.
yeah,
Okay. So this is Heikin Ashi. Again, when it signals here, come down to this point, that's your entry for NVIDIA. So now you're talking about Micron?
yeah.
Here's Micron. Yes,
It's almost 20 EMA, right?
correct.
So you can take position here or no, because it's fading up.
Question. What market is doing?
But it's just one day, you have to see the market to maybe tomorrow,
Correct.
day after, just wait and see
Correct.
then.
Let's see what market is doing. This is uh market means either SPY
Or
or
QQQ.
triple Q. Now, market found support at 20 EMA, correct? Bounce back.
Mhm.
I understand that. Next week traditionally is weaker. The entire week is weaker.
Mm.
Remember, I shared the.
Yeah, yeah.
So that means it says there is a high chance. Does not. It's not guaranteed that this will happen again. High chance that market will have a choppy condition and can even further come down. Maybe I think the market will probably come down to this level, 732 or maybe 50. So when the market will be at these levels and pushing down, you see the market preview what is doing is going down.
Going down, yeah.
So when the market will be going down, there is no way with a stock like Micron to go like this. I mean, anything is possible. Micron can do it, whatever. But Micron is a big stock now. It's a trillion
Mm.
dollar company. So it has an impact on the market, and market has an impact on Micron. It's not something like SpaceX, which has its own life, which will be have its own life. So, what should we do? We should wait for the market to stabilize, or either the people again go back here. That will give us
Or
this green
or
zone.
the trend reversal, you said. Just wait for the trend to reverse it, and then we take the entry.
Correct. Because we don't know whether the market is going to continuously follow, but tendency is we are still in a bullish time period. June itself, after the 17th of June, that period, sorry, 11 to 7, and I shared those period, and 20, starting from 26th of June till the mid of August, generally is very bullish period. So I don't think that I see a big chance of market falling to 50-day period, and even then, it can happen obviously. But I think the market for the S&P will find support here, and same as if the Micron probably at this point will find support here. Micron should not fall below this level 660. If you remember, that's a gap level. Change it one problem with the Heiken Ashi that it removes gaps because it's average out everything, right? So
Mhm.
here we see some gaps here in Micron. This gap, I'm talking about this gap, and there was a gap somewhere else as well. So Micron will probably fill this gap. Micron will probably fill this gap. At this point, it's not conducive or advisable to go long Micron. We should wait for something like this green zone to appear. And that Heiken Ashi combined with our team, that will help us in understanding. If we find a signal like this, followed by a green zone, that's our point. That will be our time to go long for Micron. But see, the PPO for the micron is quite strong. It's not going to come to zero immediately. That's probably does not happen. It happens in stages. One attempt, two attempt, three attempt, one at a time when it happens.
Mhm.
So even if the micron finds some bounce here, it could be temporary. But for
Okay, and the
us,
result,
it's
okay.
worthwhile to take a chance. Sorry, go ahead.
But the result is also there. Then there's a Fed meeting as well. So it's all big events coming up, right? To 24th, maybe it's be a volatile, right?
I would say the next week is going to be a down week.
Okay.
Now, these news and these items, they come and go. Very honestly, they are nothing more than noise. Market
Uh-huh.
is going to do what it's going to do. Unless there is a big change in some big fundamentals, like a financial crisis, like a big war. So these things are part of the game. They come every month. They don't have a long lasting impact. When you see, I have been listening to this inflation thing for years now. Inflation. What impact has it done so far? Nothing to the market. Inflation is
Okay.
there, I agree, but market is ignoring it. So similarly, this Fed thing, market probably will absorb that thing. So if you are in a strong bullish trend, market will climb the wall of the worries. In other words,
Hmm.
okay.
And one last question regarding the new IPO SpaceX. For the long term, is it advisable to have some position at the IPO price?
No, I just share in my group and maybe in other group. Where is that? This
It's
thing.
highly overvalued. Looks like highly overvalued, but
You see the tendency of all the IPOs, you name it, Facebook, Twitter, Alibaba, Shopify, Square, Twilio, Snap, MongoDB, Zoom, Uber, CrowdStrike, ARM Holding, Corpay. Tendency is that during the first year, the maximum drawdown is average drawdown is 50% plus, 50 to 55,
that's below the IPO price.
below the IPO price.
Okay.
And after 1 year, average is median is -9%, average is 14. Some were very good, like I'm holding 132%. But if you take this thing out or this Palantir out, 150, the rest of the story is almost negative.
Mhm.
Coinbase 55, Robin, no. Facebook 31%. I think the same phenomena will occur again. It will have a drawdown, something like in this range, 30, 40, 50%, and that will be your time to make an entry.
Okay.
Because at this point of time, big guys they want to get take as
They
much
want.
money, squeeze as much money out of the market, the people,
Yeah.
individuals like you and me, as they can.
Um,
So my
Okay.
suggestion would be to stay away from this because at this point of time, it's too volatile to get into it. Wait for something like this happens, and it will happen. Each one of them, you see, each one of these, not even a single I mean, look at the maximum drawdown 30, 40, 50, 60, 70, 90%.
I know it's a. I remember Facebook coming up with I think $40 something, and within weeks it went down to 20 or eighteen
Correct.
dollars because highly overvalued in 2012.
Year one maximum drawdown 54%. Twitter maximum drawdown 58%. So, if history is a guide, then we should wait for a better entry. Be
Okay.
patient.
What's the
Okay.
difference between 12 months and drawdown?
I'm sorry?
The difference between 12 months and year one max drawdown.
Maximum drawdown. This can happen any times during the 12 months in 1 year. And after
Yes.
12 months, this was the position. Okay. So the maximum drawdown could have happened after 1 week, after 6 months, after 5 months. At max, it went down to 54%. Twitter went down 58%. But after 1 month, 1 year, it was minus 10%. So in other words, it recovered. It went down to this level and then it recovered. All right.
One
Thank you.
more thing, Safik, there's a
Your
opening on
voice
this
is
coming
cutting. I'm
Friday.
sorry. I can
So will it have
understand.
any impact on?
I'm
Okay.
sorry.
Okay.
No,
Now, is it better?
no, it's cutting. There's a question about PPO. No, we should not wait every time the PPO comes out to be zero. That's not the case. Look at the MACD or PPO for the micron is very strong, right? Change it to PPO. And percent. There's a reason I like PPO because now it tells me that is this line is above than its average of this line by 13% or 14%. The not the so it's a very high level. It will take a while to come down to zero level. That's why it came here and then again went back because it was a very strong. Same thing can happen again. So we should not wait if it is too high. Honestly, it won't come down to zero level immediately. Okay.
Can we enter into these stocks next week, or we got to wait a few more weeks to stabilize because it's already up with most of the tech stocks?
I think we should wait for something like this happen. This and this happen. And this thing can happen not necessarily at a 0 point. It can happen at this point as well. When it crosses the average, like this point.
Okay.
This
Yeah, most of
probably
the
will
top
happen
stocks are
after
looking like
1
that.
week in
Tech
short.
stocks, MU, SanDisk.
Same SanDisk. SanDisk is very strong.
Yeah, very strong. You know, you can't
Yeah,
enter.
so it can take a turn when the market will take a turn. It will, and SanDisk will not. Now it's $1,500. They're already down by how much? $400,
300.
$300. So most likely it will find support here, somewhere here. If it breaks this support, most likely. So the PPO will not come down to zero at that time.
Okay, okay. So still there is a chance of one more
Yeah,
entry.
yeah, definitely. What we should be looking for, we should be looking for this kind of move, right? A green zone, green Heikin Ashi, and a PPO crossing this thing or this thing. Because it's already in a strong move. Okay. Now we have another presentation by our friend Junaid Bhai at 12:30. So I would like to conclude it. Any more question? I can answer one more question.
One more thing, Sabir, just there's a option expiry on this coming Friday. So will this have any impact on already this declining prices?
Yes, it can. Issue is that this is very tricky. If the stocks are extended, then their call premium in the money call premium they are very high. So, so the market makers, what they do is this Faisal? Am I right? Uh, who asked the question?
Yes, Faisal, this is
Okay,
for me.
Faisal, thank you. I
Faisal.
think you're calling from Saudi
Thank-
Arabia. Am I right?
Yes,
Okay,
yes.
thank you. Thanks for calling. So the issue is that they normally you see the reverse phenomena. If the stocks are beaten down, then they will rise because their in the money put premium will be too high. So they will try to bring it down. And if the stocks are too high, then they will reduce the call premium. So I cannot see a very definitive answer, but I think it's going to be very choppy around that time. Because not all the time the market makers are successful and these stocks are very strong. So they're in the money call premium is already getting lowered by like Micron and SanDisk by 200. Look what their options were. I mean, worth 1 week ago or now. So to answer your question, those stocks which were beaten down, those will rise, and those stocks which were extended, those will come down. But since it has already come down a lot, and again, it is much expected to come down to this level, for example, for 1400 even below. Then regardless of the option premium, there is likelihood that many people will be waiting for these levels, like you and me, and they will jump into this bandwagon and provide support to it. Okay.
Okay, fine. Thank you.
Sabri, can you please help do the analysis on CrowdStrike, CRWD?
I can do just last one thing because I
Yeah,
want to close this thing.
sure.
I have to start for Junaid Bhai as well. CrowdStrike, same
Yes.
phenomena. First stage here, PPOs do crossover happened here. You were under the 200-day line. Risk was higher. But since market was 17th of April, market was supporting software group was rebounding. So you had this, and you see that when you are under 200-day line, normally the first attempt is not successful. Second attempt was successful. As soon as it can green, you now I would suggest that CrowdStrike is strong. Wait for this green zone again to appear because the preview is quite high. It's 10.6. It will not come to zero level immediately. It will come to this next week. Then again will crossover, like this thing will happen at this level. At that time when the green zone appeared, that will be your entry. Not immediately at this time. It is risky because 715 probably it will come down to this 20 period there, which is around 650. By the time you will get down, you are already in $60 or $70 loss per share, and that's not advisable. It's more than 10%. So we should wait for better entry, something like this. When we have an entry at this, we have a stop loss here. When we have an entry at this, we have a stop loss below this line. Correct? So that gives us a high reward to risk trade compared to something like we jump here or here or here and we do not have any idea about our stop loss. And that's not advisable. All right, sir. I think we had a very good discussion. I'm going to upload this thing session. And if you are interested in utilizing this offer, the combo offer, please let me know, or you can go to the website. Either choose this with the annual plan for elite combo package or annual plan, because that will give you this trading view version just for $120. $120 off from the regular price if you go for the monthly option. Otherwise, it's $200 per year. Thank you very much, guys. I appreciate your being here, your questions. I hope it helped about my strategy, how to get on board on this, and hope to see you again very soon. Have a nice day.
Thank you, Sabri bhai.
Thank you. Bye-bye.